Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock, with news there's a major bond market realignment underway today. But first in Washington, which now can't seem to get anything done amid partisan politics, and a Republican Party that seems to be fracturing, progress on revising their debt limit has stopped. And the Congressional Budget Office now says it will run out of funding authority in early October. The same office is projecting sharply wider budget deficits amid static low growth over the next 10 years. However, the final data for the American first quarter growth is out today, and that saw it revised up to 1.4% from 1.2%. That was largely due to a jump in consumer spending, providing a slightly more encouraging outlook for the growth for the rest of this year. But there are plenty of reasons to believe the current dynamics in the American economy don't bode well for future growth prospects. There was a Chinese balance of payments data out overnight for the March quarter of 2017, and although there were few surprises, they did note that their external liabilities now total $4.8 trillion US. In the EU, people and businesses are feeling quite good again. Their economic sentiment indicator has reached its highest level in almost 10 years. Consumer sentiment is leading the resurgence. In Germany, consumer confidence rose in June to its highest level in 16 years. At the same time, data for German inflation showed a quickening pace, is now up to 1.6%. And it looks like the US is having second thoughts about their TTIP trade deal with Europe. Maybe the TPPA can get resurrected with the US as well. In Australia, many businesses and households there are about to get a painful surprise when their energy bills arrive in July. There are reports that some will face a tripling of prices. There's sure to be an outcry. In New York, the US Treasury 10-year yield is sharply higher yet again today, and now 2.27%. Bond prices are falling as investors seem to be resetting their expectations for the end of QE and are coming to accept that interest rates are in fact going to rise. The reset is also affecting equity prices today. The price of oil is little changed today, settling at under $45 a barrel, while the Brent benchmark is now just over $47. The gold price has slipped again and is now at $1,243 an ounce. And the Kiwi dollar has lost ground as well from yesterday's jump, is now at 72.9 US cents. On the cross rates, we are lower as well at 95 Aussie cents and 63.7 euro cents. The TWI has slipped to 76.6. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.